Okay, welcome to the Pipnotic Symposium for the 8th of May 2017. In this symposium we are going to run over some of the updates at Pipnotic, and then I'm going to run through a few pairs today. Okay, so the update, as some of you may be aware of or may have noticed, that the material in the strategies and the currency strength analysis sections of the member site has been replaced or updated, and this is because I was receiving quite a lot of emails and inquiries regarding how to trade the shorter term and the medium term, so the day trading and the scalping strategies, and there's a lot of concern about the configuration of the indicators. And so due to this high degree of confusion, I have decided to stop using the GFX version of the currency strength indicator. If you're still using it and you want to continue, that's fine, but new members will not have this indicator anymore. I simply think that it requires too much experience, and it allows for too much subjectivity when trading using this version of the indicator. And so from now on, I'm going to reference the text version and the histogram only, because this gives you a much broader range of information, and the configuration options for these indicators is very trivial. And so I think that it'll probably ensure that most people get better success than using the GFX version. Okay, so I'll just run through the strategy very quickly, and we'll start with that. And so what I've decided to do is use this the TXT, the text version of the currency strength indicator, for defining trends. So instead of pairing currency strength based on squiggly colored lines, we're going to pair currencies based on the output of this indicator you can see here. And you can see it's giving some pretty clear signals today. We have the euro and the franc that seem to be quite weak, and we have the Kiwi dollar that seems to be quite strong. And so ultimately we want to be pairing the euro franc and the Kiwi franc. So if we move those pairs onto there, so we have the euro Aussie, so on there, okay, the Kiwi franc, the first one, and the euro Kiwi here. So these should be moving nice and strongly. And we have the Kiwi strength, the Swiss franc weakness, very clear on the currency strength indicator and very clear on the price chart. We have the same going on for the euro Kiwi. And so for the day trading strategy, what we'll do is we want this configuration set to the day trading setting. So if we have a quick look at what that means, that simply means that you'll have to set the mode to day trading. And if you're scalping, it'll be on scalp, swing trading, position trading, all the settings are here. And what does that mean? Okay, if we have a look what that means. And so considering for a moment that we have a long-term, medium-term, and short-term trading time frame, so we have 3 time frames, ideally we want to see currency strength setting to the left, and the second one to the left showing us the same thing. So here you can see that we have the British pound that is actually strong on the longer term, and for the day trading, this is going to be the daily and the 4-hour. So these are the trends that we want to be following. And on the to the weak side, we have the Canadian dollar, which looks relatively weak, and we have the Japanese yen. So we could be pairing these two. And let's do that very quickly. We'll come back to these examples in a minute. Let's go to the pound Japanese yen, and this pair should be moving higher. Pound Japanese yen, and we have the pound Australian dollar. Okay, so this is on a daily chart and the 4-hour chart. So let's go to the daily chart. You can see this pair is really roaring on the daily chart over here. You can see the same thing going on here. So we have some really clear state information being given to us. And so what does that mean? Well, that means that we want to be buying the pound and selling the yen, or buying the pound and selling the Australian dollar. And so we want to go to the entry time frame, which is this one, which is two smaller than our long-term and medium-term. So this one here, which for the day trading would be the hourly chart. So we go to the hourly chart here, or for both of them, and we use the supply and demand software to show us where we need to buy. And you can see we have we have a couple of interesting areas that we could consider to buy. We have an untested area of demand just here. And over here, we have a nice untested area of demand, which is around here, just there. And so the good thing here is we know that we will be trading in line with the greater period strength, and we are going to be buying at areas where we can expect some kind of reaction. Here we have the 7,400 area, and here we have the 145, 75-ish area. So two decent areas. We'll be trading in line with what we can see here in the strength information. So I mean that's the day trading. But for the short-term traders, the people that seem to be getting confused the most, we're going to go and have a look at an alternative configuration. So we're going to set the mode to scalp. We're going to put that on OK. We're going to leave the look back on 8 or 13. I like 13, so I'll leave it on that. I'll press OK. And here you can see that we want to be, again, looking at the information we have towards the left. So the long term, or the trend, is going to be the 4 hour. So the long term trend is 4 hour. The medium term trend is the 1 hour. And the entry time frame is going to be the 30-minute or less. And so here you can see that we want to be pairing perhaps the euro. You can see that we are starting to turn down on the euro and the kiwi. So we'll grab the euro kiwi or drag it over to the middle. And what else do we have? Week, we have the Swiss franc and the New Zealand dollar, which we saw earlier on. So we'll leave that on there like that. And so here you can see that we have something interesting. First of all, we have the euro US dollar, and we have our Kiwi Swiss franc here. And so now we want to go to the entry time frame, which is a half-an-hour chart or lower, to find our entries. But before you do that, it's a good idea to go, for example, on the long term and see if you can find anything that looks interesting. And you can see that just here on the euro Kiwi, we have something just around here. It looks interesting. We'll do the same over here. What do we have? We can see we have some pretty nice demand just around here. Great, and you can see that this supply was consumed by this demand. So we have a pretty decent area here on the long term for the scalping at the 68.35 on the Kiwi Swiss franc. So now we'll go down to the hourly, see what we have here. We have a really nice kind of a wall that's been built, some resistance here. Then finally price popped above it, and the whole move originated from here. We go to the small term, the entry time frame. You can see where this move originated from, and it originated from we have the indicators drawing these nicely. We have this one here, which has been tested once. Price kind of wriggled around and messed around for a while, and then it finally broke above from around just here. And if we go to a smaller time frame, I think we're going to find we can get a clearer entry for this. You can see that we have this here. And then we have another one up here, a very small continuation pattern. It's probably clear on the half-an-hour chart. You can see that pretty nicely here, so around here. Then you ask yourself the question, is this a parent or is this a child? Well, it's a child, the parent is just below. So we could consider moving our entry to just below like this. So we put our little line there to show us where we are. And for here, we do the same thing. So we start on the 4 hour, just to eyeball these areas roughly. You go down to the 1 hour. You can see that we have an area just below. I'll just mark all of these off here to here. Good. And we go to the 30-minute or the half-an-hour, 30-minute or the 50-minute. You can see that we have a pretty nice area located at roughly the same spot. So just around here. Like here, so the 58.47, 58.50-ish area. So this is good because you know that we are selling in line with the greater period strength, and we are going to be selling at supply, and on the Kiwi franc, we are going to be buying at demand. So this is really, really nice. I like this very much. And looking at, previously when we're looking at the breakouts and these squiggly lines, it does become very subjective because it's our ability to interpret these lines that will ultimately define our success. And it's very difficult, very, very difficult indeed. And so this is absolutely positively the better way to go. Okay. Okay, so that's what we have. We have a quick look at some longer term setups. Let's go to the swing. We'll go to the position trade configuration. See, we have the franc and the Kiwi. Again, this is really good. This is really telling us that this pair is going to crawl higher. So if we reset the template here, and we go to the monthly, which tells us that this pair should be crawling higher. And you can see that it is. It's slowing higher. We're having a nice retracement down to this area of support, and we're reacting. Go to the weekly. You can see that we are indeed reacting at this area of demand. So we'll draw that in. Just here. We've had the reaction. And now we are starting to leave the area. So we simply want to find an area to buy. So the entry time frame on the position trading would be the daily, but you can see there's no clarity on the daily, so that's not very interesting to us. But while we're here, I'm going to draw off this area that might give us some trouble. And we are going to go to the 4 hour. And can you see anything here that might be interesting? We certainly can. You can really see that we have some tremendous, I'm just going to draw a line, and we have a really nice area just around here. So this could be a pretty nice area for us to buy, the 68.34. And as a matter of fact, I'm going to put that order in on my account afterwards. So if we consider that for a second, we could go from here to here. So we'd need a 24 pip stop. That's pretty tiny. Again, this is one of those pairs that looks like that. And so we have a pretty decent low-risk trade here, and we're trading in line with the greater period because we react on weekly demand, also roughly the big figure, and now we're leaving and we're continuing to move high. And so far this looks good because price has managed to rally, accumulate, and rally, and it has not been back since. So this is great. What we could do is we could go to a small time frame and have a look at the low of this candle to the left, because this is probably where price will come back to. So we go to the hourly chart for that. And you can see it's just here. This gap is a bit of a blow because it makes things pretty unclear for us. But we can move this to here. So this is our area. Price gapped into it, and then we moved higher. And then we have this one here, and this is actually the one that caused price to leave the high. So I think for an area to buy, I think the 68.32 is definitely the best option. And due to this gap here, you might want to move this down to roughly here. I think if you go to the 50-minute chart, you can probably see, I'm going to remove these so we get some more clarity. You can see what's going on. You can actually see here nicely that we have the parent-child thing going on here. We have the parent, which is not a parent, it's an older sibling. It's reacting to this. So we have the parent, child, and then prices moving up nicely. So on the smaller time frames, you can see we do have some reaction points here. We have, let me turn off these rectangles so we can focus. So we have this here, which is an extended period of accumulation, but when price left, we managed to move above these highs. We have this down here. Move these out of the way. We have this here. We have this one here. So there's a lot going on here. This looks pretty good. So here we have the demand. Here we have a nice reaction to demand. So I think if price comes back to 6,800, that would be actually an even better trade because this is the demand, this is the reaction to demand, and this is actually a reaction to this reaction. So child, parent, child, younger sibling. So you could shoot for another entry here, the 6811, which I like a little bit better than going up here because we are a little bit closer to the origin of this move. So you can take these here, but these are going to be shorter term trades, so the reaction is going to be a lot quicker. And here on the half an hour, you can see we actually have the parent and the child here. So this we might want to bring our entry down to around here because that looks a lot nicer. So I think for this one, an ideal entry would be the 6811 and the stop well below this one here. We could combine these two here, and we could have an entry at 6811 and the stop at the 6790 share, 6788 area. You can see prices is still roaring higher. Okay, so what we want to do also, we want to consider for a moment what the histogram is telling us. You can see that we are moving into this daily area of supply. This is a pretty decent one because it's well structured. This accumulation is only one period, but we didn't leave super aggressively, but we did manage to move below this low. So that says there's something in here. So what you want to do is you want to pay attention to the way price, the histogram is beginning to form once it feeds into this area of daily supply. We go to the hourly chart. You can see price down here. We had divergence. We had a low in price, a lower low in price, and we had a low in the histogram and a slightly lower low, which tells us that price was probably going to slow down here because the degree of decline here is much greater than the degree in decline here in the histogram. So this is good. This tells us that price is going to turn around or slow down at least. And so here you can see that we just simply have a really nice rejection here. And so, I mean, if we have a high in price, we have a high in price here, but we don't have a higher high in the strength information, we actually have a low one. So price is probably going to slow down somewhere up in here. So just be careful about buying anytime soon because price will probably feed back down into the areas here that you can see. And so on the smaller time frames, you can see these areas a lot clearer. We have this nice one here, the 6800 on the nose. Then we have this one here just above. And these have both been tested, keep this in mind. So you could also opt for a deeper retracement down here. If you go to the daily chart, it's probably gonna, no, on the 4 hour, yeah, you can see it on the 4 hour pretty clearly where you have green candle, we have accumulation is the body of this one in the range of the previous, yes, body of this range, body of this candle in the range of the previous, yes, no. Okay, so we have our area of demand that looks like, I'll draw it like this, which I think looks pretty interesting. So the 6778. So this could also be an area for us to buy. These ones that have to be managed a little bit more aggressively and carefully. This is more of a set and forget trade, simply because we are reacting at this little continuation pattern here. We have a lot of these. We have, I mean, you can see how all of these layers, this is pretty efficient trading. Price goes up, out of bounds, inbounds, out of bounds, inbounds, out of bounds, inbounds. So this is nice. This is nice trading. When price did leave here, it did manage to move quite nicely and move above all of these highs. So this is a pretty decent area to buy at. I don't know if you might want to put your limit order there and buy. That would have been nice, but you simply don't know if price is going to stop or not. So it's best to go to the smaller time frames and look for this price to reject, and then position yourself based on what you can see on those time frames. But I mean, there are a lot of options, I think, here. And we also have another one here that we can consider, the 6850 area. But again, just be a little bit careful because we are heading into some pretty major supply at the top here. If we have a look at this, you ask yourself, has price been back here since? And you say, yes, it has. Well, when this one is established, price came all the way up here. So this is good because this makes me believe that price will continue through this. And so you have to ask yourself, well, what area has price not been back to yet since it moved down? And it's been back to here. The only one that has not been tested yet is this one here. So we can do it like this. So this is the only area where you could consider just to sell without a test. This is the one up here. So the 69.14 here. So we're probably going to get a reaction there, a pretty tight pip risk, but I wouldn't do anything like that here because price is yet to feed back into this one, and it's been back to this level many times in the past. So the 69.14 is the first area where you could consider to start putting limits into to sell. All right, goody. Okay, let's have another look here at the other pair, the Euro Kiwi. What's going on in the Euro Kiwi again? Let's remove the, oops, let's remove the rectangles. I'm going to remove this. So have a look here quickly. This is more of a swing trade, which is great. You can see the euro is really moving higher over the Kiwi. Not so good. And this is a bit of a conflict here. You can see this is simply not looking very good at all. We do have the Cad Kiwi, which looks okay. We have this as sixth weakest, and the Kiwi is the strongest. So let's look at the Cad Kiwi on this chart. So Kiwi Cad. So this pair should be moving higher. If the indicator does that, what you just saw down here, just let it sit for a minute, and then it should work out just fine. So we have the Cad Kiwi should be moving higher, and it is. And not a pair that I trade, so there's not a lot of historical data. So we have to, yeah, we can't really see what's going on here, which is a blow. My broker doesn't have any data for me, which is a. Let's see if we're managing to download any. No, we're not going to bother with that one because there's simply not enough price data to analyze. Oh, there it went. Excellent. You go to the weekly. Okay. Okay. So okay, now it's starting to trickle in. So we have prices drifting higher. You can see we've managed to move above this high here. We're reacting on this demand down here. I'm going to turn off. So we have to find these levels ourselves. You see we're reacting here. First time, second time, price went up. So we go to the daily chart, knowing that we should be buying, we should be positioning ourselves in an area of demand here. So you can see here that we have a nice area here. This is really nice demand. Price tested it, and price has left. So price is really moving high. We also have an upward sloping trend line, which we can draw like so. Like this. We have a very clear, sorry, a bit of a cough there, a very clear uptrend on the daily. So now we want to go to the entry time frame, which is actually the 4-hour chart. And you can see we have something interesting going on. We have this area of demand. This is demand because it managed to consume opposing supply. This is a reaction. This is not supply, but this is a reaction to supply to the left. Went through it. Now it's coming down, and this one has been taken out. So this, we can move up here. We can maybe move it like that. Price tested that. And now price appears to be slowing down a little bit. It's roaring up on the 4-hour chart, but you can see it's kind of stuck in a sideways pattern. So we want to be a little bit careful here. Here. Alternatively, we do have some longer period trades that look pretty nice, and they are down here at this weekly demand. And we have something like this, the 4-hour entry, and a potential retracement back to this area here, which is where price, so the 9,200 area, that'd be a pretty nice low risk trade there. And price seems to be breaking down. We've taken this out. We've had a really nice push. This area of supply is being respected, so price will have to either move below here or take out this supply before we can position ourselves. So for this, we can't really do anything for the time being. So we'll leave that one alone. What else do we have? We have the yen and the franc, as you can see here. We have the yen strong, second strongest. Franc is the second weakest. So let's have a yen franc. It's probably franc yen. Here it is. So if we have a look, what's this doing? So franc yen, so this should be moving lower. Okay, which it is. You can see that we are approaching this little beauty. Oh, we're on a really small time frame. Sorry about that. That doesn't matter at all. Irrelevant little area. You can see how price is moving up pretty nicely. And you can see we're starting to react at these highs. Let's see where they are. They're reacting at these highs here, which is just here. So this is the area. Price has been back there a few times before, and you can see that price has actually been back there as well. So ideally, for just sells, you wanna be looking the very earliest to consider something here. But even this has been tested once, a lot of times. So wouldn't be too comfortable until price gets maybe up here to just stand in front of the train, like up here. That looks okay. But for the time being, price is starting to crawl down, retracing. So we want to find a place to buy. So we go to the smaller time frames and have a look. Come on, price. Go let it download briefly. Okay, so now we're reacting at daily supply. Weathered supply, and you can see that we have currency strength divergence here, which means that price is probably going to move back down. And so you're going to be a little bit careful. So if we look at this little price structure, you can see that we have a couple of areas that look interesting. This one is tested once, so that's not interesting to us. This is tested once, which is uninteresting to us. But this one here has not been tested yet. This is nice, the 112.50. So this might be a really interesting area to buy at, despite the fact that we have this. We're probably going to come down here, get a reaction, and move up before we continue lower. So there's certainly something to consider there. And just below that, we have this. And below there, we don't really have a whole lot of supply or fresh supply. Yeah, we don't really have any until, what's this? Until this, which has almost been tested, and then down here. Okay, so we've got this one, which has been tested, technically speaking, but we could consider something in here or something in here. We do also have what appears to be a small continuation pattern in here. It looks something like that, which would close the gap as well. So back onto the 4 hour. Oops. You can see it looks like that, but that's not a pretty one. Yes, you can see that this is actually a reaction to something in here, and this brings us down to, I gotta use the other tool. So here we have the parent, the child, so this is reacting to this, and this is reacting to here, and so we have a fresh area right there. Excuse me. That's pretty much it for fresh areas. I mean, we've got this one, and this one. That's it. This is everything in between is just rubbish. When price comes down, here, probably get a reaction. We almost got there, so maybe if price manages to feed into here, we'll probably get a reaction to 109.72, which should be quite interesting. But do keep in mind that we want price to wriggle down a little bit. So these are like kind of shorter term trades, but they probably do okay because of this pretty nice imbalance in supply and demand. So if we use the fibs to see how far in the curve we are, ideally you want to be at least 50%, which brings us down to this here. Also here there's been a lot of trading. So if you take this one, manage it carefully. This is the first one you might want to consider. Then we do have I suppose like a nice sell-off accumulation rally at the 62. And then that brings us all the way down here to the bottom. So a couple of areas there to eyeball. Let's see what else we have. If we have a look at something else that's not related to strength information, just interesting areas. Let's have a look at one of my favorites. This one here, what's going on here? Wow, we have some pretty clear. We have this one, which is a whopper, a very clear area. And we have this one here, which is a child reacting on the parent, which is here. So there were 30, I'm going to mark that. It goes like that. So we have a pretty good area right there. This has already been tested. So I think price will probably come down to this one, which is tested, come back up here, we get a nice short, and then maybe a buy eventually into this. Let's have a look at strength information just for fun. The Aussie US dollar. The Aussie is looking pretty strong. The American dollar is also looking pretty strong, so pretty kind of flattish. What is this? This is the month, the weekly, daily. What's this? This is the daily. You can see the 4 and 6, so they're pretty close to each other. 7, 8, so they're pretty close to each other. So this kind of shows a bit of sideways price movement. You can see that, yeah, price is kind of moving within a range here. But I like this one here. And I also like this one down here. If we go into a 4-hour and have a closer look at the one in the bottom, you can see that we have some, this looks like a pretty good area. Price has already been down to here, so ideally you don't want to pay a price any more expensive than the 73.32. But there's a lot going for this area. I think simply how price moved. You can see here, this is also a really nice area, simply how the way price left. We've got some small areas within here. There's a lot of small bits and bobs in there. Let's see where that tested. Yeah, price took the first one. And it's still to reach the second one, so we could consider this one down here, which is a nice reaction to this daily area. So we also have another nested area here. And we have a nice breakaway, kind of just here. You see how we had a tough time moving above this area. Then price finally cut away, and this happened from around, we take this one as well, the whole area, looks like that. A few areas to watch there. 7244 I like very much. This is not fresh anymore. This is fresh, it's been tested. This is still to be tested. This one's been tested by the release, but this one is still untested, the 7244. So that'd be a pretty nice one down there, I think. Yeah, so I think that we've got that going pretty sideways, and also the one at the top here, I like that very much. If we have a quick look at it, so it looks like that there. So I'm just going to mark off the low according to the daily chart. I think it was about like that. And so you can see that we had the parent, child just below, so a nice child reaction right there, which is really nice. We're going to mark off the whole area like that. So the 75.30 with the stop above this high, it would also be a really nice one. Yeah, so that's what we have going there. If we have a trade open on the CAD, let's see what that's doing. That's starting to move higher. And you can see, so I mean, price, we like this area up here. So we sold right there. Oops, move it like that so we can see where. Go to the smaller chart and have a look at the area. Okay. So you can see this is the area we liked, and we liked it simply because this is where price cut away from. We put it a couple pips below just to make sure we got filled, and that's where price came to, pretty much. And actually went a little bit deeper. Let's have a look where it went to, see if we can find it. Well, it could have gone for this one here. I'll take this one out, or the test back. So the poke up into the area, so it could be anywhere around there. If we go back and look, no, it didn't get there, just got just below. So kind of between the areas there. But now price is starting, we reacted on this 4-hour demand, I can see. It was demand, let's have a look. Yeah, 4-hour demand here. We tested nicely. It's been tested once. This is a second test, a third test, fourth test. So this has been beaten up a little bit. So I'm hoping the price will come back up here, have a go at this level here, and then continue lower. I've taken 60% of the trade off already. Expecting price to have a test here, and hopefully munch through this bit, and then come down to this 4-hour area, or something in here. We also have this little flower, which is a bit of a brute. So we have a lot of potential reaction areas. This is nothing here. This is just kind of nothing very exciting. This, you can see this has all been tested. This is fresh. This has not been tested. This is a child, and the parent is down here. So I'm in my entry, sorry, my exit is around here. I'll put it like that. And that'll bring in the remaining 80, 80 bucks. So that looks pretty interesting. I closed this one out here a little bit. Yeah, so that's what we have there, I think. And anyway, I shan't make this longer than usual. If no one has any questions, I am going to wrap this up, and then we will call it a day. If you have any questions, again, please send it in. And as I mentioned, the strategies video has changed, and I'm probably going to do another iteration based on your feedback, but also based on some of the updates that I make to the strategy based on this new approach to using the text version of the currency strength indicator. I simply think that it gives a much more objective insight into which way the market is going to go, and again, combining currency strength with supply and demand is really a powerful combination. Okay, good stuff. I'll leave it at that. I hope you're all doing exceedingly well, and I look very much forward to hearing from you. Thanks.